Hello everyone, welcome to Easy Economics. How are you all doing? I hope you all are doing good. Today I brought for you all a brand new series for 9708 AS Economics. We will be looking at topical series today, and the topic that I have brought today is the circular flow of income. So we'll be looking at the circular flow of income, and the circular flow of income is topic 4.2 of our syllabus. So the first part of the syllabus, we will be looking at what do we exactly mean by circular flow of income? How does a circular flow of income looks like in a two-sector model and in a four-sector economy? And in the second part, we will be looking at the equilibrium and the disequilibrium situation in an economy. Now, as you can see the figure on your screen, the circular flow of income is circular. The graphical representation shows circular. Now you'll be noticing three items that I've written in blue: output, income, and expenditure. What actually is the circular flow of income? It is actually a movement or a flow of income that actually helps us understand how incomes, spending, and outputs move in an economy. So if you look at the situation, output is produced by firms. That output generates incomes, and then we use that income to further spend on goods and services, right? So this circular flow keeps on moving, right? So the model helps us understand how output generates incomes, which is then spent on the output again, right? We earn income and then we spend it further again on output, right? Now, this model also helps us understand how an economy's GDP can be measured by looking at the aggregate output, income, and the total expenditure. Moving forward. Now, what do you mean by a closed economy? If we look at the same model and we try to understand the circular flow of income in a closed economy, so notice there's a term called closed economy. What do you mean a closed economy? You see, a closed economy is an economy which does not participate in international trade, right? But if we talk about the real world scenario, there won't be any economy, there would be no economies, or there won't be any economy at present that won't be participating in international trade, right? So, for our understanding, the basic understanding of the circular flow of income, we have tried to depict this situation in which an economy is a closed economy. So, what are we taking it as? An economy which does not participate in international trade. So, what does that mean? That means it would neither be exporting any goods or services, and neither it would be importing any goods and services. Since it does not participate in international trade, so there won't be a movement or a flow of goods and services with trading partners, right? But then again, this is the question mark that I have made. In the end, in the real life scenario, it won't exist, but it's there for our own understanding. Now, look at this diagram. Don't get overwhelmed. Now, there are two movements happening at present. The black arrows, that's the inside movement. And the red arrows are showing the movement outside the circle, right? So now there are two types of flows happening. What's happening? That the inside circle is representing what? It's representing the flow of products and services. Notice the inside circle. What is happening? That firms produce goods and services, which households buy. Households give their factor services. How? Households work in these factories, right? Or they are entrepreneurs, right? So when they give their factor services to firms, what does firms in turn do? Firms produce those goods and services. And then eventually what happens to those goods and services? These goods and services are then bought by households. So this flow keeps on moving. Now look at the outside circle. What does the outside circle represent? The outside circle is showing the flow or the movement of money through spending and incomes. The outside circle is showing the money flow, and the inside circle is showing the flow of products and services. Now let's look at the red arrows. What happens? Households spend on goods and services, right? They spend their money. They spent it. Who earned that income? Firms. Firms use that income to give out factor payments. What do you mean by factor payments? Wages, they'll pay it to the labor. Interest, they'll pay it on capital consumed. Profit, they have to generate if they are entrepreneurs, right? What are they seeking? Profits, right? Profit maximization. Plus rent on land, right? Rent on premises, right? So these are the factor payments. So this flow of movement keeps on moving. This circular flow of movement is a flow of movement in a two-sector economy. What do you mean a two-sector economy? Which does not participate in international trade. Because at the moment, you'll see we are not talking about any exports. We are not talking about any imports. We have not even included the government over here, right? So notice that these elements are missing from this model of circular flow of income. Why? Because we are talking about a closed economy situation, right? What do you mean by factor services? The services of labor, capital, entrepreneur, and land. ENT is entrepreneur, right? I hope you're with me. Now what happens? There comes a situation of an open economy. Now what's an open economy? An open economy is entirely opposite, contrary to a closed economy. Now we know that a closed economy is one that does not participate in international trade. But then what about an open economy? An open economy is an economy that participates in international trade. So when we are talking about international trade, what should be included in our circular flow of income? Exports, imports, government. So when we are including exports and imports, there would be other elements as well. And what are those other elements? Now you will notice lots of arrows. I have used different color coding and I'll explain you what happens. Now first, don't look at the black arrows or the green arrows. Notice that the inside circle and the outside circle is the same. If you look at the red and the blue arrows, they're the same that we drew in the two-sector economy. Now what is happening? There are lots of green arrows away from the circular flow of income, and there are black arrows that are moving to as well the flow of income, and they are moving away also. But then what is happening? You see, this is a four-sector model. Now, once we are talking about an economy that participates in international trade, it would be exporting, it would be importing, right? So this means we are not only talking about income or expenditure that is being generated by way of domestic output, rather we are also talking about spending on imports, right? And earning on exports. So when there would be spending on imports and earnings on exports, there is the government sector as well. The government is also spending. So government would also be generating its revenue. And what does the government generate its revenue through from? Taxes, right? So there would be an element of indirect taxes, and there would also be an element of indirect taxes. So direct and indirect taxes both would be there. Now notice direct taxes are here because we are talking about incomes, right? So it's charged from factor payments. It's moving away. Notice the arrow is moving away from the circular flow. Savings is also moving away. Government expenditure and exports are moving too. Now, what is actually happening? This model helps explain two key concepts over here: leakages and injections. First, what are leakages? When we are talking about withdrawals from the circular flow of income, right? You see, whatever income is being earned, not all income would be there in your hand. Some part of the income would go in savings, some part of income would go as taxes, either direct or indirect, and some part of this additional income earned would go on imports. So these are the leakages. Leakages means that you have spent it, right? So it's reducing the income, right? So that is why you will notice then once savings is there, taxes is there, and imports are there, you notice the direction of the arrow. It's away from the circular flow. See, look at the arrow of the savings. It's moving away from the circular flow of income. Look at the arrow for the direct taxes and the indirect tax over here. And similarly for the imports. What is happening? It's moving away from the circular flow. So that means that these are withdrawals from the circular flow of income. Now, again, an opposite term to these leakages is what? It's injections. Now, what do you mean by injections? Injections are additions to the circular flow of income. When you add on to the circular flow of income, this means what? This means these are extra items of spending, right? In the form of investment made by firms. Government is going to be spending on infrastructure, on subsidies, right? Or spending by foreigners on your exports. So your goods and services that are domestically being produced and are now exports, termed as exports, would be bought by foreigners, right? So this is going to be an injection as well. So these are the three sources of injection that would be adding to the circular flow of income. So the arrow should be pointing towards the circular flow of income and not away. Now let's see. Look at investment. It's pointing towards the consumer spending on goods and services, right? Similarly, look at exports and look at government spending. So it's all towards the flow of income. We are talking about injection. When it's movement away, we are talking about leakages. All right. I hope you've understood. In the second part, I'll be back with the equilibrium and the disequilibrium that will be represented by way of circular flow of income. Happy learning.